This is Crypto Clarified, where we cut through the noise and talk about what's really happening in digital assets. My name is Vinh Tran, Associate Director of Business Development at WisdomTree Digital Assets.
And I'm Dovile Silenskyte, Director responsible for digital asset research at WisdomTree Europe.
And today we're joined by Kean Gilbert, Head of Institutional Relations at Lido Finance. We're going to be talking about what is liquid staking, what is Lido, the importance of education for widespread adoption, and the recent growth in demand we're seeing from institutional investors. Hello, Kean. Great to have you on today. Thank you for joining us.
My pleasure. Thanks for having me.
Absolutely. It's a busy week here in the States. For those of you listening, it's Thanksgiving week tomorrow. So it's going to be a lot to be thankful for today. To start, Kean, I just wanted to start from square one. I know what you guys do, but for those listening who may be coming from a non-technical background, can we start with just what is staking?
Sure. So I think when I always try and describe staking to people, there's kind of different levels. So there's like level 1, 2, and 3. Like level 1, you have native staking. Level 2, liquid staking is kind of where Lido sits. And then level 3 is like restaking. In terms of kind of native staking, you can think of it simply as staking your ETH to secure the network. And your reward for staking your ETH and securing the network is basically staking rewards. And the issue with kind of native staking from an investor perspective is that it's not that capital efficient. You're taking your ETH, you're locking it up, and you're getting a small staking reward rate of around 3%. The issue with native staking is kind of two parts in the sense of you have an entry queue for your ETH, so it takes around 25 days before your ETH starts earning rewards, and then you have a withdrawal queue, typically around 30 to 40 days where it is right now. And this kind of feeds on to level 2 and where Lido sits with liquid staking. So with Lido's solution, it basically is a case of you give your ETH through Lido's middleware, it's staked with us, and you're given stETH in return, or stETH. And this is basically a certificate of deposit, and it represents two things. The ETH you just stake through Lido's middleware and your staking rewards. So what's really cool about stETH is that you can deploy it into DeFi, or if you want to get instant liquidity, you can swap stETH into stables. So we're trying to address those kind of two key issues at the native staking side, liquidity and kind of capital efficiency.
Got it. And in terms of what Lido is doing into enabling that, how would you say you're differentiating yourself from other liquid staking protocols?
I think the main difference is just the pure size. So like Lido's TVL right now is around 26 or 27 billion, and that equates to around 9 million ETH being staked through the middleware. And for someone in kind of my position who's speaking to institutions, they really care about two things. Like they want to know how much they can sell, how long it takes to sell. So really that depth of liquidity. So if you kind of take the liquidity out of a liquid staking token, you tend to just have like not a very good token. So for us, having this ability to say there's a strong depth of liquidity there is a real selling point. And the second I would say is the kind of network effects around stETH. Like I think there's around $10 billion of stETH being used as collateral in DeFi today. So having those network effects of stETH being so widely adopted is a key selling point. And then maybe a third bonus point I would say is that stETH is just so battle tested. It's been around for quite a long time. We have dedicated insurance fund. I think we spent 4 or 5 million now in audits. And the conversations we're having with these different institutional partners, again, security comes up quite a lot. I would say security and liquidity at a high level are probably the two key topics, and they're both topics that Lido can stand behind and have a very strong narrative to kind of represent the work that the team is doing.
And the space that we operate in is very crowded. So there are many players trying to win market shares from each other, trying to outdo each other. How do you ensure that you stay ahead of others, that you maintain the big portion of staked ETH on your ecosystem?
Yeah, I think from my perspective, it was always about kind of growing the pie. Like when you compare crypto to traditional finance, it's obviously very much a small proportion of that. In terms of like what we're trying to do to maintain market shares, make stETH as readily available as possible, and both at a retail level and at the institutional side. So from a retail perspective, it's getting stETH listed on different centralized exchanges. From an institutional side, it's getting stETH used for different ETPs and ETFs. And then I suppose the kind of third thing we're trying to do right now is present different strategies to users on how they can use stETH. Because a big piece of feedback we've gotten before is that, look, we love Lido, the liquidity, we love having stETH, but unless you're more of an advanced user, you may not know how to deploy your stETH into DeFi. So one of the big products that we've kind of launched recently is a product called Lido Earn. And the whole idea with Lido Earn is this idea of off-the-shelf DeFi strategies, where you can go onto Lido Earn, select the DeFi strategy that kind of fits your risk tolerance, and then you can deploy your stETH that way.
Fascinating. And are there any other use cases? For example, are you somehow involved with stablecoins that you could talk about?
On the stablecoin side of things, I would say not too much. Like most of what we're seeing right now, I would say from a stablecoin side is if people want instant liquidity. So again, maybe from an ETP aspect, like you guys are well aware, like most staking ETPs have a 50%, maybe 60% staking rate, because the withdrawal queue is so long. With us, what we can tend to do is allow individuals or institutions to swap their stETH instantly for stables. So again, instead of waiting 40 days, you can operate on a T+1, T+2 basis to handle those redemptions.
Very, very interesting. And just remind me, was you made reference to ETFs. So we see a lot of references to digital asset treasuries. Is there, I'm sure that there are Ethereum or ETH treasuries. Is there anything in staked ETH space that's happening now? And if there is, how should investors think about, staked ETH via digital asset treasuries or staked ETH via other wrappers?
Yeah, it's an interesting question. Like obviously the DACOs or the digital asset treasury companies are very much a hot topic right now in the States. And I think they got a lot of attention, especially because they were able to stake their ETH within the treasuries when ETFs in the States couldn't. And I think now the landscape in the US has definitely started to shift over the past couple of months. It does feel like we're just at the cusp of staking being approved for these ETFs. So the real narrative change will have to be from the DACOs, where having staking within their treasury is not going to be the big selling point anymore. I think the big selling point is going to have to be around how can they generate higher yields on the ETH that they have. And that's again where staked ETH comes in. So the ability for them to deploy stETH into, say, Aave or use it as collateral, or maybe they want to start looping their stETH. I think ultimately for the DACOs to remain competitive with a future staked ETH ETF is that they're going to have to generate higher returns. And that's again where we would hope stETH would come in a part of their strategy. And it's kind of interesting, like from speaking to different DACOs, I think the serious players understand like that's where the sweet spot will be, getting higher returns. And stETH is in a fortunate position that we would kind of slot into their strategy in a number of different ways. They might have a native staking strategy, which again, allowing them to use stETH is perfect from a diversification point of view. They may have a pure liquid staking strategy, so that could just be 100% stETH. And then they may have a DeFi strategy, so getting stETH used in DeFi. So again, generate higher returns. So in terms of probably your other point of the question, like how the two compare from an investor perspective, I think obviously from an ETF, obviously you're getting units of the fund, you're paying probably 20, 30 bips depending on the product. Obviously you want the staking rate of that product to be as high as possible. The DACOs have a different opportunity in the sense of potentially generating higher returns. But I also see a world where like the DACOs probably buy the ETF. Again, diversification is a big thing for them, so it might make sense.
And I think you make a good point there, differentiating between the two. And I think to double click on that to talk about access, and to really take a step back, how would Lido interact with these institutions in terms of the value prop that you are offering, and how do you typically work with bigger institutions on staking or liquid staking?
Yeah, we have a couple of different channels. So the first is probably our most ideal, is just going onto the dApp, staking your ETH directly. And we've seen some quite large crypto whales stake 50, 60,000 ETH by just going on the website, which is terrific endorsement of how much kind of confidence they have in the product. And the other avenue that's quite popular is through different QCs, so qualified custodians, MPC wallet providers, and different partners. So that would be the likes of, say, Fireblocks, Copper, Hextrust, BitGo, and a couple of others. where their clients can go on their console, select Lido as a liquid staking provider, and stake their ETH within that environment. And the third, which we think is going to be incredibly important, is going to be on the ETP side of things in Europe, and then the ETF side of things in the States. So a much more of a traditional wrapper has been around a long time, heavily regulated, and a lot more traditional institutions who may not be able to go and buy spot or go into DeFi. This is an opportunity for them to just buy, say, a future stETH ETP or ETF.
And actually, let's talk more about this. So now investors in Europe, they're able to buy staked Ethereum exchange traded products that stake portion of ETH because of this liquidity issue that you talked at the start of podcast. How would these products compare to staked ETH ETP once there is one?
Yeah, so most of the natively staked ETPs in Europe right now, they tend to have a staking rate of 50, 60%. Again, that could be reduced lower if the withdrawal queue is increasing. And the key issue with those products is that if you have a 50% staking rate, you have 50% unstaked. So it means that if the rewards rate is 3%, the investor is only getting half that reward rate, so 1.5%. What we're trying to do, or the concept would be, if we were to use Lido staked ETH within this product, is that it's going to be 100% staked. So you're passing on the full 3% staking reward rate to the investor. So obviously from the issuer's point of view, it's a better product. And from the investor's point of view, you're getting the full 3% staking reward rate.
It sounds like much, much better option for investors.
Yeah.
I know Dovile likes to say this is like putting new wine in old bottles is what it sounds like. And I think to talk more about that yield and how you are distributing. So you mentioned a couple different avenues, whether it be this type of wrapper or directly on your platform. How do you see that developing over the next year or 2 years as more institutions come into the mix?
So like a big part of the feedback we've gotten over the past year from institutions is that like if they don't have a secure way to custody stETH, they won't touch it. So my focus has been to really build this ecosystem around Lido Institutional. So the custody partners has been a huge part of that. So like Fireblocks is a tremendous business, BitGo, Copper, they're all excellent tier 1 custodians and very well respected in their fields. And so for me, the priority was to make sure that we had native integrations there. And because we speak to a lot of DACCOs or liquid funds, and they won't go outside of their QC. They just don't feel safe doing that. Now, it's probably a pure comfort thing. There might be an educational reason, but a lot of clients that we speak to will just not leave Fireblocks. They want to do everything within Fireblocks. So again, from my perspective, building that depth of ecosystem around integration is super important. And we want to kind of keep growing that as much as we possibly can. So like crypto custodians is great. Maybe eventually there could be a Fidelity of the world that would offer stETH custody. And then maybe the other side of that could be like a neobank, like a Robinhood or a Nubank in Brazil. So for me, just making sure that stETH is readily available for trading and custody is just high priority.
Interesting. And do you find that when you're looking at distribution in that way, what is typically the biggest challenge for you? Is it more the avenues of distribution? Is it more education on what stETH is, or is it even regulation?
You mean, say, with the partners specifically we're trying to work with?
Exactly.
I suppose, not to be too blunt, a big part of it may be a financial element. A lot of these custodians tend to want to be heavily compensated to work with them. So getting this integration over the line. And so that can be a blocker sometimes, where if they ask for a large sum of money, it just may not be feasible from a business sense. And the other topic that comes up quite a lot is, can we bring a client? So again, the Fireblockses of the world, these are obviously companies where they have jam-packed roadmaps. And I think they're completely within their right to say, look, if a client wants it, we'll definitely prioritize it. So again, this is the benefit of Lido being so big and successful, that we always have a huge amount of clients that we can say, here's a list of clients that would use it if you were to build it within your console. And then the third part on the regulatory side, I would say maybe 6 months ago, that was probably an issue, or at least it came up a lot in conversation, that do you have regulatory clarity from BaFin and FINMA? And at the time, we didn't. We were having conversations with regulators. We were just kind of starting our journey about trying to launch a European ETP. Whereas now we have those approvals, like BaFin, FINMA approval for stETH. stETH now can be added to European ETPs for trading on SIX, Citra, Euronext Amsterdam, Paris. So we're starting to get all these ticks that we didn't have before, and each tick we get just gives institutions a lot more comfort that, okay, we are institutional grade.
Early in this discussion, you mentioned growing the pie, which I love the idea because all of us, want to grow a big, delicious pie. How does staked ETH contribute to, the taste of the pie? How well is it integrated across the whole ecosystem? Where there are many people talking about tokens being used as collateral, tokens being used for liquidity, tokens being used as yield sources. Is staked ETH playing a role in each one of these places? Is staked ETH looking to play more roles than these? Like, it would be great if you could talk about this.
Yeah, so like from our perspective, like Ethereum is the number one priority, and like anything we can do to help grow adoption of Ethereum, like we're always supportive of doing that. And I think again, like I kind of touched on earlier on, like a lot of people hold ETH, whether it's staked or unstaked. And what we've kind of heard feedback from institutions and retail is that they don't want to stake it because they don't want to wait 45 days to get it back. And like we all know, a lot can change in crypto in one day, let alone 40 days. So for us, we have a really strong narrative that we can go and say, look, if you use us, you're helping diversification or help decentralize Ethereum because, like I mentioned, Lido is a middleware. Nothing is actually staked with Lido, but on the back end, we have 800 different node operators. So that's one of the key missions for Lido, is to help drive decentralization for Ethereum as a whole. Whereas compared to, say, if you have ETH and you want to stake it with a centralized exchange, that is not going to have the same impact on decentralization. And the other point I would mention is we're just trying to make it as easy as possible for people to stake. And I think, again, once you have that access point for people to do that, how they start deploying their seat in the DeFi with different protocols or whatever use case they decide, suddenly you have this kind of multiplication effect where, okay, the pie will naturally grow from there.
And what headwinds do you see? Headwinds over the next month, year, 10 years, just take the time period that you feel comfortable talking about.
Headwinds. I think probably regulatory uncertainty is always one. Like there's always seems to be a new tariff coming in to take out some of the glowing aspects out of crypto. But I think, and I'm sorry, I'm being facetious. That's not fair. Like obviously a lot of positive things have happened on the regulatory side over the past kind of 6 months in the US, which is terrific. And it's led to a lot of growth. Concerning elements for me, I think it has always been hacking. I've always had a concern if there's smart contract risk or people have not done their due diligence on what protocols they're using. And that's something that's always kind of, I wouldn't say kept me up at night, but it's always something I would raise, that if you're using any protocol, you should do your due diligence on it to make sure that there's been smart contract auditing, that there may be an insurance fund, that, okay, if you put your money in, can you get it back? What happens if there is an incident? Who's protected, who isn't? And I think a lot of people take what they know in the traditional finance world as everything being heavily regulated and you have consumer protection. In crypto, it may not be like that, especially if you're operating in the DeFi world. You need to do your own due diligence. Like the analogy I give to people is like, there's no helpline that you can pick up if you send your ETH to the wrong address. So you have to be comfortable and confident, know what you're doing, and you have to understand the risks.
I think you're being a good salesperson for exchange-traded products because the risks are being managed by professionals. So you limit the accents like this of something being sent to the wrong address. But when you putting the headwinds aside, putting growing pie aside, next year is very close. So we're getting almost to 2026. What are your key targets for the next year? What do you want to achieve? And it can be, for Lido, for staked ETH, for broader Ethereum ecosystem. Like, what are the targets, the goals for the next year?
Yeah, like firstly when you say that, I'm like, where has 2025 gone? Like, this year has just disappeared. Um, I think from my perspective, there's a couple of things. The first is to get stETH added to a European ETP. Like that is a huge priority for me. I just think there's a huge amount of opportunity in that because, like I said, the existing market is, I would say, somewhat saturated with products that are operating at 50 to 60%. The chance for us to launch a product that is 100% staked, the narrative behind that is really strong, and I think you will get a lot of market attention. The second is an American ETF. Like given the ETF market in the US is, I think, 10 times the size of a European one, but the US is obviously so far behind Europe. I'm really interested to see, like, will they go through the same headaches that Europe went through with 50%, 60% staking rate, or will they maybe operate closer to 80, 90% and maybe take out a line of credit, or what novel solutions they'll employ to get to a higher staking rate. DATCOs I still think are going to be a big opportunity for us. So speaking to a lot of DATCOs, hopefully going to announce some interesting things there in the new year. And then the third thing I'm probably really excited about is one of the new products we're launching called ST Vaults. So the whole idea of ST Vaults is to kind of give greater customization and control to institutions. Because a big piece of feedback we've gotten from 2025 is that institutions love Lido, the decentralization, but they may not be comfortable not knowing where the ETH is being staked. So the whole idea of ST Vaults is this ability for you to choose the custodian that you work with, choose the node operator, and then you can decide if and when you mint ETH. So this idea of 364 days a year, it's natively staked, and the one day you want liquidity, you mint ETH. And I think that's going to be really interesting to see what use cases come from that. Will it be more from ETF issuers who want to get a higher staking rate on the product, or will it be DATCOs? So will they just have 100% natively staked business and then the one day a year they mint stETH for liquidity, or will they have a proportion of the strategy for stETH in a liquid staking aspect?
I think these are great. And as you know, a lot of people in our industry, we're always asking ourselves, right, like, what is that killer app that really leads to mass adoption? I think to come back to what you mentioned earlier in the podcast, you mentioned products like Vault Earn or credit lines. I think these are things that I would love to talk more about in the sense of, well, one, can you dive deeper into what these products are? How do they leverage stETH in terms of build, but also how can they be integrated into everyday apps? Because I think that's what makes it relatable to people non-technical or non in the industry, where they can come and access these products, right? And be able to either earn yield, earn liquidity, or get liquidity rather. Yeah.
Sure. So yeah, like I said before, like when you come and you stake your ETH with Lido, we give you stETH in return. And one of the things we notice is that people are minting stETH, but they're not doing anything with it, or not enough people are doing something with stETH. And we launched Lido Earn a couple of months ago. And the whole idea with Lido Earn is to just make it as easy as possible for people to take their stETH and deploy it into a specific strategy. So we have a couple of strategies on the website right now. I think there's 3, maybe 4. And each one basically represents different DeFi or blue chip strategy. So we have a Lido GGV Vault or Golden Goose Vault and Lido DVV, and each one would have a different kind of, I would say, strategy behind it, and each one would have a different kind of APY associated to it depending on the strategy that's being used. So for example, with the Lido GGV Vault, on the back end, you would have stETH or wrap stETH being used in Aave and different strategies accompanying to kind of say Aave to get a higher return on your stETH. So I think the staking reward rate for stETH right now is around 2.6%. And in that specific vault, it's around 4.5, 4.6%.
Got it. And do you see that integration being expanded outside of Lido's ecosystem? So, for example, being implemented in, you mentioned Fidelity earlier, like a Fidelity UI, for example, for institutions or even retail to access.
Yeah, absolutely. And that's, again, kind of goes back to like the ecosystem play. So the goal eventually would be to say, within maybe Fireblocks, again, just an example, like clients within Fireblocks can go and stake their ETH with Lido and get stETH. We want to now make it seamless for them to take their stETH within the Fireblocks console and deploy it within one of those vaults. And so again, just making it as easy as possible for them to stake and do more things and get higher returns.
Yeah, that's incredible. And I think
Yeah.
part two of that, I know earlier this year, there was a partnership that you guys announced with Maple regarding stablecoin credit lines. How does that play into the whole strategy of usability and utility for stETH?
Yeah, so like stETH is a fantastic asset to use as collateral, because if you think about it, when you compare stETH to say unstaked ETH or USDC, you're using an underlying asset that's always generating staking rewards. So it's stETH, when you're using it as collateral, you're always generating an underlying 3% yield, which is very efficient. So what we've done with Maple is the ability to allow people to borrow against their stETH. So again, the ability to get, say, USDC, keep their stETH in the background, earning an underlying 3%, which again is very efficient. And we're starting to see really good traction with that, and Maple is seeing some good inflows from that. And I should say, like, Maple is one great example, but there's other products like, say, Fireblocks off exchange, where we would have kind of exchange partnerships with the likes of Bybit, Deribit, Wintermute, and OKX, where stETH can be used as collateral for trading, and the haircut tends to be around like 10-15%.
It's fascinating. You're mentioning a number of areas where Lido is involved. So I can imagine you standing on few legs. Which leg do you think will be the strongest during next year, and which one is most of the growth going to come from? Like which one of the areas are you most excited about for the next year?
Yeah, I'm probably being biased. Like, I think the institutional growth of stETH is going to be big. Like, Lido has had huge success on the retail side of things and DeFi. My focus now is to take all the hard work of the people who've come before me on the DeFi side of things and try and do the same in the off-chain world or the institutional side. So I'd say institutional aspect is a huge focus for us, and I'm a huge believer that when we launch a stETH ETP, that's going to see tremendous growth. And so that's my big bet. I know it's very biased given the podcast that I'm on, but I genuinely believe, I think we'll see some serious adoption of stETH among the family offices of Europe and different asset managers, because again, the narrative is so strong and it makes so much sense.
I like your biases, so thank you for that.
For institutions, how would you explain this type of exposure, for example? Because it almost rivals that of like a bond or a fixed income product. Where do you see this being a place in a institutional portfolio?
It's a really tough question, because like, it's crazy. Like, when I meet some people who manage hundreds of billions and they still just think of Bitcoin, that's it. Like, it is crazy. Like, the level of knowledge, you would think after, I don't know, 10, 12 years in this industry, you would think it's expanded. And at the traditional level, to a lot of people, blockchain and Bitcoin is the same thing. So a big part of my job is kind of educating people that, look, blockchain is a technology and Bitcoin, ETH is a use case of cryptocurrencies. In terms of like when we're speaking to clients and the sense of where does stETH sit in your portfolio, it tends to be around if they already hold unstaked ETH. And again, to the point before, where if they're holding ETH and it's unstaked, they're usually doing it because they don't want the risk of centralizing it with one node operator. And they don't want the risk of dealing with the withdrawal queue if it increases to, say, 35, 40 days. So when I speak to these big family offices or asset managers, we really lean on the benefits of diversification. So like I said, 800 node operators, nothing is staked or centralized. And then the second is that instant liquidity. So again, if you want to get out of your position, the market's starting to turn or whatever it may be, we're there for you with a strong depth of liquidity for you to get out. And I would say they're the pitches that get the most attraction. And I know Joseph Shalom and SharpLink, whenever I see him speaking on podcasts or panels, he's always saying that like institutions care about two things. It's security and liquidity. And I can definitely say from the conversations I've had, that definitely rings true.
Yeah, I think
Okay, go ahead.
Yeah, no, I just wanted to double click on the liquidity front because that's something that obviously we know on our side. I'm sure Dovile and I, we speak a lot about to our clients, the idea of liquidity and being able to go in and out of assets and how tokenization can really, or cryptocurrencies rather, can really solve that issue. So yeah, it resonates. And Dovile, I think you had a question.
Yes, I was going to say that I quite like the point about the trade-off between security and usability. And it would be interesting to drill in deeper. Was Lido, when you have your ecosystem or when you look at how it is operating, you have to choose which one you give more priority to or which one you pay more attention. So how do you decide, how much decentralization you have, how much security you need, how much usability for users and investors you can provide? Like how do you think for this?
Yeah, I think like security is number one. Like if people don't trust what you're doing and don't believe that like you're using a solution that's been heavily audited or you haven't invested enough in the protection of security of these smart contracts, they inevitably won't use it. And so I would say security is number one. And the kind of follow up to that again would probably be on the infrastructure side. So working with the likes of Fireblocks, Copper, and others to make sure it's secure. In terms of how we would probably prioritize it, it's very much on a case by case basis. And we're so fortunate that we speak to so many different clients and partners. You do tend to get a good sense of what's happening in the market. And like a good example I could probably give you is like Canton. I would say in January, no one was talking about Canton Network. And roll up to say June, July, everyone was talking about Canton. So then suddenly that's my responsibility then to go and speak to the good folk at Canton, understand what's happening within their ecosystem. And then as a team, we would make a decision that, okay, should we focus our resources on making sure that stETH or wrap stETH is supported on Canton? So do we believe that the growth of Canton from maybe an institutional perspective will be strong? And if we do believe that, we'll make sure that we're there. Or like another example might be Linea. So Linea has grown from strength to strength. Linea is owned by Consensus. Consensus is a node operator for Lido. So something like that, it makes a huge amount of sense to kind of deepen our partnership, given that Consensus has Linea and Consensus has MetaMask. Obviously, Joe Lubin is I think, chairman of the board for SharpLink. So we're very much focused on big long-term ecosystem plays.
And quickly, you mentioned node operator quite often, and I know obviously we all know what that is. Given the theme of the name of the podcast being Crypto Clarified, can you give a quick explanation of what a node operator is and how that leads to security then to make it more relatable?
Sure. So there's probably big companies that everyone has heard of, like Figment, P2P, Chorus One. These are what's called node operators. And you could think of them like the AWS of the crypto world. They take away the hassle of you running your own infrastructure. And to the point around native staking, which I probably glossed over earlier, if you want to be involved in native staking, you need to have 32 ETH. So if you wanted to go and work with a P2P or a Chorus One, you would have to send them 32 ETH. They would spin up a node, and then you would start earning your staking rewards. Like these guys are like terrific at what they do. They've been around for quite a long time. They're heavily focused on security, protection of assets, and they would also be node operators for Lido. I should have mentioned before, one of the other kind of big selling points of Lido is that when you go down the route of native staking with like a Figment or a Kiln, you have to give them 32 ETH. The benefits of Lido and liquid staking is that you can stake as much or as little as you want. So 32 ETH can be quite a big barrier, especially if the price is high. With us, you can go on the DApp and like stake as much or as little as you like, which is again removing that barrier. And again, Dovile, to your point earlier on around growing the pie, that could be again one of the big reasons why people may not stake their ETH, because they may not have 32. So we're again great believers of that. That shouldn't be a barrier for people to generate staking rewards. You should have the ability to go and support decentralization and earn rewards on your ETH.
Amazing. Thank you. I'm going to take that for my next one, my next call. So to quickly zoom out and think 3 to 5 years ahead, How do you see the landscape shaping up in terms of staking, liquid staking, and DeFi? How do you see it evolving? Who the players involved, and also um, how do you see that really transcending into everyday use cases, not just for institutional, but even retail, perhaps?
So I'd say probably more regulatory clarity, which is always a good thing. Like I'm a great believer that like institutions won't get involved in crypto unless they know the rules of the game. So I think that's pretty likely going to happen. I think it's probably not controversial to say you're probably going to see some consolidation, especially on the staking side of things. And like again, you guys know better than most, like you really are fighting for bips. Um, and the market is again quite volatile. So I would suspect there would probably be consolidation. Um, like again, I'm not a big believer that there should be a race to the bottom in terms of pricing. Like everyone should have the ability to make money, but again, consolidation will probably play a part of that. Um, on the other side of things, I would say we're probably going to see a lot more traditional institutions come in a bit deeper into crypto. I think, again, BlackRock is a great example of what they've done with their Ether product, and I think their recent filing for a staked ETF for ETH. And these are all strong indications that crypto is going to continue to grow. And obviously the fantastic work that like WisdomTree has done as well to help grow adoption of crypto among the traditional kind of asset manager. And so for me, when you see big players like WisdomTree, BlackRock, Fidelity placing these big bets in crypto, these guys tend not to place bad bets. And I'm a great believer that this is an indication of the success that's going to come over the next 2 to 5 years. It's not going to be a straight line as much as we all want that. But in reality, I think over time, it's just going to continue to grow, and you'll have this snowball effect.
It's the J curve.
Yeah, the future is optimistic, and thank you for your compliments on what we are doing in this space, because we're spending a lot of time educating our investors about crypto, the value of having some within their portfolios. So it's good to see that you're recognizing that as well.
Yeah, and like I would say, like I've been doing this a long time. Like I remember, I think I got into crypto in 2016, 2017. And if you're having a meeting with clients, you're always spending the first 15, 20 minutes trying to educate them what blockchain was, telling them it's not just Bitcoin, there was other use cases. And it can be quite difficult to go from education to opening your wallet. And by that, I mean making an investment. And that was something that I spent years doing. Like you were always sending a slide deck with what is crypto at the very beginning. Whereas like if you're Salesforce or your HubSpot, you're not starting your email with what is the internet. And I think it's only over the past kind of 3 years where people are like, okay, we get what blockchain is, or we're just, the boat has left, we can't ask those questions anymore. They're just focusing on, okay, this is here, it's real, serious people are validating that it makes sense. Now let's just focus on the use case, not just the technology that powers behind it.
I'm smiling because I know exactly what you're talking about. We actually still use a slide deck that starts with, all right, what is a blockchain? And it's a picture of a phone. And then the next page is a picture of 2 phones, then 3, then 10, and it's like a network of phones. So don't discount it. I think education is still a big part.
Yeah. Now, look, I'm a big proponent of like case studies and white paper and thought leadership. As we all know, like institutions love a good PDF document. So I think we'll still be sending PDFs. What is crypto? What is blockchain? What is stETH? And the important part for me is that when you're educating people, you're giving them the right information. Because the worst thing you can do is turn to someone who is the source of truth and for them to give bad information. And I think there's a lot of onus on Lido, at least from a staking perspective, that a lot of companies look to us as like being the lighthouse, that we know what we're doing. So it's really important from my perspective that we keep that trust in the brand, and that whenever someone reaches out to us for information, there's a huge amount of talented people behind the scenes doing due diligence and research to make sure that when we provide information, it's the most accurate as possible.
And I think this is a brilliant point to end our discussion, because yes, Lido, you're doing a lot of work in educating us, our listeners, about what you are, what you do, how everything operates. And we very, very much appreciate the time you have spent with us today.
Super. Thanks so much for having me.
Thank you.
Thank you.
We just had a brilliant discussion with Kean, learned a lot, and thank him much for his time with us just now. And to clarify, the views and opinions expressed in this podcast are those of Wisdom Tree and Lido and are subject to change. Anything we present in this podcast is not intended to be relied upon as forecast, research, nor as investment or tax advice. The information and opinions expressed in this podcast are not a recommendation, offer, or solicitation to buy or sell any securities, and reliance upon them is at the sole discretion of the listener. Please remember, past performance is no indication of future results.